Welcome to Foreign Currencies with Scott. I'm your host, Scott. So today we're looking at a website that is a great website for beginners and even for not beginners. It's called babypips.com. And babypips.com has a lot of useful information for new traders about how things work. And I wanted to show you this today to relate it to something we've said on the channel before, which is that trading markets are open 24 hours a day, 5 days a week. So they take the weekend off, but otherwise trading occurs around the clock. Now, this is a foreign market representation on the babypips.com website. You can get to it by going to babypips.com and then looking at tools and Forex market hours. You can see that we're in the New York time zone, and you can see the current time there is 17:05 on Wednesday. But if you look below that, you will see the 4 markets around the world that manage currency trading. So first there is Sydney in Australia, Tokyo in Japan, London in the UK, and New York here in the United States. So you can see from the bar at the current time that the New York market just closed and the Sydney market just opened. And sometimes during the day you can see that multiple markets are open, such as at noon here, for example, in the east coast of the United States. Both the New York market and the London market are both open. You'll also see the bottom there where it says typically volume is low at this time when it's only the Sydney market. You will see volumes higher when the London market is open and when the New York market is open, and a little bit for the Tokyo session as well. Now, having high volumes is also critical for us for another reason. And let's take a look at that. I'll just switch over. Okay, so I've switched over to our broker application, and we're looking at a current market value for GBP USD. And you can see that the sell and buy numbers are separated by 12 pips, 12.0. They both have 3 pipettes, but one is 17 and the other is 29. And then if you didn't want to do that math, you could look at the little black box at the bottom that connects 2 of them, and it says 12. That is the spread. So that is what the broker is making. Obviously, if you want to sell it, they give you a little less. If you want to buy it, it costs you a little more. We've talked about that before. That's partially how they make their money. Now, 12 is a large spread. And so if you were to buy this and pay the 29.5 pips for it, you would immediately be down, and you would need the market to move 12 pips just to get back even. So if we're risking 20 pips to get 30 or 40 pips of expected profit, starting down 12 is not a good place to be. So when market volume is low, the spread is going to be higher. This will be true generally for any broker. So we want to trade when volumes are higher. And you've probably noticed before that the GBP USD for this broker is typically the spread is 1.6 or even as low as 1, just 1 pip. So we will always shoot to trade during the normal business day here in the United States. It overlaps a little bit with the London market, and that is good for us considering we're trading on the Great British Pound here. So that is our lesson for today. I'm your host, Scott, and this is Foreign Currencies with Scott.